Welcome to ACCQ Continuing Professional Education. This time we're going to talk about a subject matter which is quite a bit complicated, but we will try to make it simple. This is what you call your consolidated financial statements. Now, we've done a video on that before. It's a basic consolidation financial statement. This is actually the second part of that series. So this is what you call the consolidated financial statement subsequent to the date of acquisition. So we're going to talk about the salient features involved in the consolidation of the financial statements. I'm going to teach you how to make a simple consolidated financial statements between constituent companies. So what is this all about, this consolidated financial statement? So we have done a video with regard to this one on consolidated financial statement. This time, ito naman yung after the acquisition or the subsequent date of acquisition. So meron na ditong mga operations, no? Okay, para lang sa partnership yan. Nag-uumpisa muna dun sa formation, yung valuation ng assets, and then after that yung operations, no? So this is similar to a partnership, no? Only thing is this is yung dalawang corporation, no? Okay, magsasanib, no? So instead of a partnership, it's a corporation. Now, without much ado, let's proceed to the some of the salient features dito involved in consolidation subsequent to the date of acquisition. Okay, so let's take up some of the consolidation procedures involved in this one. So first is to eliminate, so this is a step-by-step process, itong consolidation of financial statement subsequent to the date of acquisition. No? Okay, so first we have to eliminate the investments in subsidiary account and adding line by line yung mga similar items of assets, liabilities, and expenses of parent and subsidiary. So mamaya papakita natin yung pagsasama natin yung total ng kanilang mga accounts, no? So assets, liabilities, and expenses. Okay, how we consolidate it, no? And then, however, changes in the subsidiary net assets since acquisition date are considered. Okay, so katulad ng sinabi natin kanina, no? Meron rin mga may mga changes during the year because example is that kung binili siya, let's say at the beginning of the year, so iba pa yung fair value ng assets nung constituent companies, yung parent and subsidiary, as compared with the end of the year, no? Kasi may operations na dito. Okay, so marami mga considerations na kailangan tayong i-take into account dito mamaya. So, we'll do this by way of example. As we can see here, ito ang ating mahiwagang Excel. Ayan. So, consolidation subsequent to date of acquisition. So, on January 1, 2021, JFC acquired 80% of CK, parang talking, no? JFC. Well, it's just a namesake, no? Parang may recall, no? JFC or Jollibee Food Corporations acquired CK or Chowking for 75,000 pesos. So yun yung ito yung purchase price, no? So information on acquisition date on January 1, 2021. Ayan. Makikita natin dito, no? Okay, so CK's Incorporated's net identifiable assets have a carrying amount of 74,000. Take note of that, 74,000 in a fair value of 90,000. Ayan. So, magkaiba yung carrying amount dun sa fair value, ha? Kasi yung carrying amount, hindi pa dyan considered yung mga adjustments, no? Okay, now, as we can see here dito, yung carrying amount on January 1 of the ito yung mga some of the accounts ni CK or si CK na nga, no? Okay, so ito yung inventory. Yung inventory niya is 20,000 pero yung fair value niya is 24,000. So meron tayong mamayang adjustment, no? We call that FVA or fair value adjustment of yung sa account na yon, particularly dito sa inventory. While we have yung equipment from 40,000 yung carrying amount, which has a fair value, okay, of 52,000. Okay, so meron 12,000 adjustment. So for a total of 16,000 adjustment. Yan. So as makita natin dito, 60,000 yung carrying amount of both assets and then yung fair value is 76. Now, information includes the remaining useful life of the equipment is 6 years. Okay, so may depreciation expense yan. No? Okay, so and then JFC measured the NCI or non-controlling interest at proportionate share. Okay, so ayun yung percentage doon, no? Okay, exclusive of yung percentage na ni parent. Information on subsequent reporting date, December 31, 2021. So ito yung kanilang financial statement of both JFC and CK as at December 31. So end of the year na, after 1 year. No? So yung assets, cash, 23,000 for JFC. Take note of that. 657,000 for CK Incorporated. So we're going to consolidate that mamaya pag gumawa tayo ng consolidated financial position, no, of JFC and yung kanyang subsidiary. And then yung accounts receivable, JFC for 75,000 and for CK, that's 22,000. Inventory niya, at the end of the year, it's 105 for JFC and for CK, that's 15,000. So yung investment in subsidiary at cost is 75,000. Ito yung purchase price, no? Yung halaga. Ito yung pagkakabili niya. And then yung of course yung kay CK wala, zero, no? Okay. And then equipment net, this 140,000 for JFC and for CK that's 30,000 for total assets for JFC of 418,000 and for CK that's 124,000. And okay, so tapos yung sa liabilities and equity naman niya, so they only have one yung sa accounts payable. For JFC that's 72,000 versus yung kay CK of 30,000. So yung total liabilities yun pa rin, 73 and 30,000. And yung share cap, this is just to to simplify yung itong problem, no? So kaya isa lang yung kanyang liabilities. And then share capital, but of course in reality mas marami yun, no? Especially in real life. Well, this is also particularly dun sa akma rin to sa real world situation. Kaya lang pinasimple lang natin. Okay, so and then we have here yung share capital for JFC that's 170,000 and for CK that's 40,000. Share premium, okay, ito yung additional paid-in capital, no? 65,000 for JFC and for kay CK that's 10,000, no? Okay, ito yung mga yung bang pag bumili ka ng stock above par, no? Okay, yung par value ng stock. Ito yung of course yung par value, ito yung nag-a-appear dun sa stock certificate, no? Okay, so pag binili mo ng higit pa doon, so ito yung tinatawag na share premium, no? And then we have retained earnings for JFC, we have 110,000 versus yung kay CK of 44,000. So for a total equity of 345,000 for JFC and 94,000 kay CK. So in total liabilities and equity, you just add the liabilities and equity of the constituent accounts, yung kay JFC, that's 73,000 plus 345,000, we have 418,000, which is similar to yung sa assets na 418,000. While kay CK, we have 124,000. And then yung statements of profit or loss nila, yung kanilang operations during the year, no, yung kanya-kanyang operations, no. Okay, so for the year, so si JFC kumita ng 300,000 while kay CK 120,000. And then yung kay dun sa cost of goods sold, we have 165,000 for JFC, and for CK that's 72,000. Tapos gross profit, ito yung kinitan ni JFC, no, sales less cost of sales or cost of goods sold. So that's 135,000. Kay CK, that's 48,000. Now, ito depreciation expense, okay, that's 40,000 for JFC, and for CK, that's 10,000. And distribution cost of 35,000 for JFC, and for CK, that's 18,000, for a total profit for the year for JFC of 60,000 and for CK of 20,000. Now, there were additional yung information. There were no dividends declared, no intercompany transactions, and no impairment of goodwill in 2021. Okay, so the requirement here is magpiprepare tayo ng December 31 consolidated financial statements. Okay, this is after na nung date of acquisition, or nakapasama na dito yung operations nila. Okay. Now, the solution, step by step to. This is a five-step process, no? So, una is analysis of subsidiary net income. So, makikita natin dito, sino ba yung subsidiary dito? Si CK, no? Isipin mo lang si Chowking, no? Para mas madali lang tandaan. No? Okay, but this is not necessarily si Chowking, no? Okay, ano lang, no? Kumbaga para lang mas may recall. Okay, so kasi parent niya si Jollibee, no? Si JFC. Okay, so ito, CK Incorporated. So yung January 1, 2021, tsaka yung December 31, 2021, no? So that's about a year. So yung net change, makikita lang natin dito. So yung net assets at carrying amount, we have 74,000 on dito, yung that's a given, no? Okay, dito. Yan dito, yan 74,000, which is given dun sa problem. And for at December 31, 2021, naging 94,000 yung net carrying amount ng assets niya. Saan ba yun? Ayun, yun siya. Okay, when you say net assets, this is the difference between total assets and total liabilities, no? Okay, so equals equity, no? Okay, so that's why ito yung net carrying amount ng kanyang net assets. Another term for net assets are net worth, net assets, equity, capital, similar yung meaning, no? Okay, and then fair value, of course, ito yung fair value adjustment. Okay. May papakita natin yung computation to, that's 16,000. And then may kinalaman to sa mga assets yung in-adjust kanina, yung sa inventory as well as yung equipment. And then noong December 31 may 10,000 adjustment, no? So for total of 104 nagdagan. Okay, so yun yung magi-reflect, no? Okay, yung fair value. And then yung of course nung ito yung difference nung yung sa dalawang dates, no? Yung acquisition date ng January 1 saka yung December 31 na net assets at fair value. So that's a total net change of 14,000. So as we can see here, we have the computation of the above, no? Yung inventory niya, yung pinakita natin doon kanina, no? So there's a 4,000. Okay? A 4,000 net change dun sa if we see here yung rito. Okay, yung inventory dito makikita natin doon sa taas. Okay, yun siya, yung 4,000 yung sa inventory, tapos 12,000 naman yung sa equipment. Okay, so yun yan. Yan. Pinakita lang natin, no? Yan. So, yan yung computation niya. Yan. So, 4,000 and 12,000 for total of 16,000. Of course, yung sa useful life ng inventory, no, that's non-applicable because inventory yan, it is assumed na mabebenta yan dun rin sa taon na yon, no? Okay, besides it's considered as a current asset, no? Okay, within 1 year. Okay, so yung depreciation niya, that's 4,000 rin, no? Okay, ibig sabihin mabebenta siya, that is the assumption, no? And then yung equipment niya, so we have the information a while ago, it was said that 6 years. So simply divide 12,000 by 6 years. So that's 2,000 yung depreciation. So yung carrying amount ng equipment niya magiging 10,000 na lang, no? Okay, because 10 less 2, 12 less 2 was 10,000. So meron siyang 10,000 fair value. Okay? And then the entire inventory is assumed to be sold during the year. Now, after that, no, yung analysis dun sa net asset nung subsidiary, we now proceed dito naman sa goodwill computation. Okay, so by the way, no, itong amounts ito, itong fair value adjustment, yung 16,000, ito yon. Tapos yung 10,000 at the end of the year, ayun yan. Okay? Okay, so that's the first step, no? And the second step is goodwill computation. So here's how to compute the goodwill. Now, the goodwill that is reported in the post-combination financial statement is the amount determined at the acquisition date less accumulated impairment loss. So yung consideration transferred was stated at 75,000. Okay, now yung non-controlling interest, no, in the acquiree, that's 90,000. Nakuha natin dito sa step 1. Okay, ito 90,000 yan. Ayun, no, 90,000. No? Okay. Now, 80%, ano lang yan, no? Okay, so non-controlling interest, since 80% yung dun sa parent, so it goes without saying that 20% mapupunta dun sa non-controlling interest. Ito yung mga maliliit na shareholders, no? Or stockholders, ayaw mong shareholders. Ito yung mga no. Okay, so sila yung mga non-controlling interest, no. Another term for that is minority interest, no? Okay, so ito. So as we can see here, 90,000 times ito yung pag-aari nila dun sa acquiree. Okay, or si CK, no. So that is 18,000. So 90,000 times 20%. So wala naman tayong previously held, no. We assume that we are the parent, no? Okay, so wala naman tayong previously held equity interest in the acquiree. So yung total niya is 93,000. Now, yung fair value of net identifiable asset, we have computed a while ago, that's 90,000, no? Yung fair value. Okay, so 93 less 90 will give you yung 3,000, which is considered as a goodwill. Ito yung as of January 1, 2021, no? Okay. Okay, yung sa beginning, no? Yung sa acquisition date. Now, less accumulated of impairment loss, yun na rin yung kanyang goodwill as of December 31. So wala naman, hindi naman na-impair yung goodwill, no? During the year. So next is yung step 3. Okay? So step 3 is non-controlling interest in net assets. Take note of that, no? Non-controlling interest in net assets. Mamaya isa-summarize natin yung mga steps, no? Okay, so we have subsidiaries net assets at fair value December 31, 2021. We have computed that yung sa step 1, no? So that's 104,000. Ayun. Okay, yun siya. Yan. 94 plus 10, no? Okay, yung December 31 na net assets ni subsidiary at fair value. Okay, so that's 104,000. Okay? And then multiply that by 20% yung NCI or the non-controlling percentage, no? Okay, which is 20% because kay parent kasi is 80%, no? So 100 less 80 is 20%. Yeah. So we have the non-controlling interest in net asset on December 31, 2021 at 20,800. Ayan. Okay, so that's the third step, no? So madali lang to, no? Step by step lang yan, no? Again, just to recap, no? Okay, step 1 again is analysis of the subsidiaries net assets. Number 2 is computation of goodwill. And number 3 is non-controlling interest, no, NCI in net assets, no? Okay, so yan. As of December 31, no? Okay, so and then the fourth step, dito na tayo, consolidated retained earnings. So, yung consolidated retained earnings, no, ang i-retain lang natin is yung sa parent lang. Hindi na natin kukunin yung sa subsidiary. So that's why parents retained earnings December 31, 2021, 110,000. Sa kanya lang yun, no? Okay, so makikita natin dito yung kanyang retained earnings, no? Okay, so ito siya. Dun sa pinakauna, yan. Ito yung kanyang retained earnings. Yan. Okay, 110,000. Dahil sa parent yan, no? Kay JFC. Okay. Yan. And then, parent share in the net change in subsidiaries net asset, that's 11,200. Ano na-compute yan? Ba, mali ko. Ganito yan. Okay, so, add yan. No? So, 110,000 times plus 11,200 equals 121,200. So, ganito lang computation niya. No? Okay, yung net change in CKs or CK, yung subsidiary net asset is 14,000 which is computed dito sa step 1. Ito. Ayun, yung 14,000. Ayun, there you go. Yan. Okay. Yung 90,000 yung fair value niya at the beginning tapos naging 104 at the end of the year, so 14,000. So kukunin lang natin yung 80% niyan, no? So well, we will get, no? Okay, so 14,000 times 80% will get yon 11,200. That's why we get 11,200. Yan. So this is the consolidated retained earnings. Yan. So, kinukuha lang natin yung para dun sa parent, no? Okay, yan. Now, step 5, okay. Step 5 yung profits naman nila, no? So we consolidate their profits, JFC and CK. So 60,000 yung kay JFC while CK has 20,000. Saan po nakita yon? Ito po siya. Okay, ito po yung ano, no? So yung profit niya, ito. 60,000 kay JFC and yung kay CK that's for 20,000. Yan. So that's why meron tayo ditong ano, meron tayong 80,000 yan, no? 60 plus 80. No, 60 plus 20. No? And then yung depreciation of fair value of the assets yung sa step 1 which is 6,000. Yun nakuha natin kanina yung depreciation. There you go. Yan. Yun 6,000, no? Okay. Yung nabenta yung buo yung inventory tapos dinepreciate yung equipment by 6 years, so nakuha natin 2,000. No? Okay, so that's yan, kaya 6,000 yan. Okay. And then so kunin mo lang yung balance. We have consolidated profit of 74,000. Now we're ready to proceed with the yung sa dito sa sa paggawa ng itong consolidated, no? So makikita natin dito, okay, so the consolidated profit is attributed to the owners of the parent and the NCI as follows. Yan. So yung sa parent, no, makikita natin dito, parent share dun sa profit before FBA, that's 60,000. Of course, yung NCI wala pa, no? So 60,000 pa rin. And then share in the in the subsidiaries profit before FBA, so that's 16,000. Ayan. Okay, so mamaya papakita natin computation tapos dito sa NCI 4,000. 16,000 kasi 80% yan, no? Okay, and then so tapos itong 4,000 that's 20%, no? Okay, so 20,000 yung consolidated yan. And then yung depreciation that's 4,800 and 1,200. 6,000. Now, paano ba nakuha itong mga computation na yan? Ganito lang yan. No? Okay, so ito yung profit, no, ni CK, that's 20,000. Okay, di ba yung nakita natin, di ba 80 yung kay 60 yung kay kay parent, tapos yung subsidiary was 20. Okay, so yung 20,000 na yon, no, i-multiply ba natin dun sa sa percentage ni parent, which is 80%. Yun yung ano niya, yun yung kanyang shareholdings, no? Nagloloban. Okay. Diba nakita yung background na dito ako sa I'm in the sa New York Stock Exchange. Medyo madaling araw dito. No? Okay, anyway, makikita natin dyan, no? Yung profit of CK was 20,000. No, as we have seen a while ago. So 80% niyan yung binili ni parent is 16,000, kaya meron dito tayong 16, no? Okay. Now, itong of course yung remaining niyan, yung 20%, 4,000 mapupunta dito kay NCI. Tapos i-consolidate pa rin 'yan. So yung 16 plus 4 is 20. Pasok pa rin siya, no? Okay. Tapos yung depreciation, no? So yung of course 80% of that depreciation, yung out of 6,000 yung depreciation expense, no? Okay, so 4,800 niyan pasok kay kay JFC yung parent. Tapos yung 1,200, which is 20% of 6,000, no? Okay, dun sa NCI, pero pasok pa rin siya sa consolidated. So what does that mean? Well, it means that this allocation is like what the parent is saying, what is yours is mine and what is mine alone. Parang gano'n, no? Okay, para bang pinag-iwalay lang yan in terms of yung presentation, pero sa akin pa rin yung yung profit mo, no? Yung bang 20% na yon na hindi ko nabili, no? So in essence, no, sa kanya pa rin yun. So this is in support of the principle of substance over form, no? Okay, ayan. So as we can see here, we have the JFC group of companies. Ito na yung consolidated consolidated statement of financial position. So yan, heading, no? As of December 31, 2021. So this is after a year of operations, no? Okay, so we have assets. Pinag-add mo lang yung una tayo sa cash, no? Simula tayo sa cash, yung 23,000 kay parent, tapos yung 57 kay ito siya, yung 23 and 57. Yan. Okay. Yan. So we have 80. Tapos ganoon rin sa accounts receivable, wala namang adjustments diyan, no? So 75 plus 22 is 97. And we have inventories. So we have 105 kay parent, tapos kay subsidiary, that's 15,000, tapos of course zero, wala namang depreciation. So 120,000. And then in-eliminate natin, as you can see, yung investment in subsidiary. Okay, so we have yung investment in subsidiary. Ayan, there. So in-eliminate natin yan, no? For dun sa consolidated statement. Yan. So, and then yung equipment, we have 140 kay parent, tapos 30 kay of course kay subsidiary, tapos yung 10,000 yung fair value, no, yung increase, no? Okay, ito yun siya, yun yan. Okay, 10,000 nag-increase siya, no? Okay, so December 31 yan. So that's why 140,000 plus itong 140,000, no? Plus 30,000 plus 10,000, no? Yung nakuha natin sa step 1, so equals 180,000. And then yung goodwill of 3,000 we have computed for that, no? Okay, yung 93 less 90, no? So we have a total assets of 480,000, no? Yan. Okay. And then we now proceed dun sa liabilities and equity. So as we can see here, we only have yung accounts payable. So 70,000 and 30,000. So we have 103. No? Okay, so as of December 31, 2021. And we have yung share capital, which is the parent only. Okay, wala yung hindi kasama yung sa subsidiary. So ito yung sa parent, no? Okay. Yan, nasa taas dito. Yung share, yung kanyang share capital, ayun, no? Yan, na 170. Hindi nakasama itong 40 na yan. Okay? So tinatanggal natin yung mga lahat ng capital balances ni subsidiary kasi sa atin na siya. Okay, so yan, 170. And then share premium, of course, kay parent lang yan. Tapos yung retained earnings, yung na-compute natin dito sa step 4, yung 121,000. Okay, so we have computed that. Yun, this one, no? Okay, yung yan. Okay, so that's 110 yung para kay parent, December 31, plus yung net change dun sa subsidiaries net assets of 11,200 yan. So we have yun there yung 121,200, and we have yung, of course, the owners of parent. Ayan, so inad lang natin yung tatlo. Ayan, so we have yung share capital of 170 plus share premium of 65 and yung retained earnings na 121,200. Now we have yung non-controlling interest na na-compute natin dun sa step 3. Okay? So the step, itong yung this one, no? Okay, yung sa non-controlling interest. So pinaghiwalay natin yung sa non-controlling interest, no? Okay, it is also part of the yung sa equity, pero pinaghiwalay lang natin siya. Okay, so that's why ito yung non-controlling interest na 20,800. Yan, so we have seen here again dito sa step 3, ayun siya. Yan, yung sa non-controlling interest, yung 20% of the 104,000 subsidiaries net assets, no? Ayan. Okay, so there, 20,800. So we have a total equity of 377,000. So pag inad mo yon, we add yung total liabilities and the total equity. So we have 480,000. Ayan, so pareho dun sa net sa total assets. Now we, of course, yung dalawang importanteng financial statement lang, no? Okay, yung dalawang basic na financial statement, no? So yung financial position and yung profit and loss. Okay, consolidated statement of profit and loss as of December 31 for the JFC group of companies. So we have yung sales of 420, pinag-add lang natin yung sales ni JFC na 300 tsaka yung 120 ni subsidiary or ni CK. And then cost of goods sold, we have yung 165,000 kay JFC, tapos yung 72 ni subsidiary, plus yung 4,000 na ibenta yung yung inventory, no? Okay, so na-use up na yun. So that's 241,000. So we have 179,000 yung gross profit. And then after which, ililess natin yung depreciation expense. So pinagsama natin yung depreciation expense ni parent sa ni subsidiary. Okay, plus yung additional na 2,000 na depreciation doon sa equipment. So we have 52,000. And then this distribution cost, no? So hindi naman na change, and so pinagsama lang natin. So 53,000, no? And then we have profit for the year of 74,000. Now, yung partition dito sa 74,000, no? Which is, sasabihin mo, superficial kasi inangkin pa rin ni ni parent yan, eh, no? Okay. Well, as you can see, kay parent, owners of parent, that's 71,200, no? Okay, so that's 80%, yung bang kumbaga yung nakuha natin dito sa step 5, no? Okay, so as we see here, okay, yun yung 74,000. Yan. Consolidated profit, no? Okay, and then of course, owners of parent, that's 71,200. Tapos yung non-controlling interest, that's 2,000. 800, no? Galing yan dito sa ano, yan. So 71,000 owners of parent. Tapos yung kay NCI, no? It's 28. So for total of yan. So this, yan. So galing dito sa this particular step. Yan. Okay. There. Yan. So ito. So parang kanya pa rin yan kahit nasabi mo kumbaga parang kay doon na yun sa non-controlling interest. Kumbaga yun na nga, the premise, what is yours is mine and what is mine alone. That's the one that is prevailing as far as this consolidated financial statement is concerned. No? Okay, so just to summarize the steps, no? Okay, step number 1, we have analyzed, no, analysis of the subsidiaries net assets. Number 2 is computation of goodwill. Number 3 is non-controlling interest in net assets. Number 4 is consolidated retained earnings. And last step, which is step number 5, is consolidated profit or loss. So if you have any questions, you may write your comments here. No? And if you have other topics that you want us to discuss, just comment right there, no? And also if you want, shout out, no? No? Okay, so thank you. God bless. Stay safe and stay healthy. See ya.